Hey guys, it's Nick. In this video, I want to explain what's going on with this crazy nickel short squeeze. So the price of nickel went from about $20,000 a ton in January to about $100,000 last Tuesday. So I want to talk about that huge nickel producer that got an $8 billion margin call and talk about how JP Morgan finds itself entangled in all of this. Also, I want to look at how the London Metal Exchange changed the rules in the middle of the game to protect themselves and, of course, the big players. So even if you have no interest in the nickel market, what is happening here can happen in some of the markets you may invest in. So stay tuned to see what happens when the market breaks. So this story starts with Xiang Guangda, who is the chairman of Tsingshan Holding Group, which produced about 10.8 million tons of stainless steel in 2020 and about $50 billion in revenue. They mine and produce nickel and make stainless steel in China and Indonesia. So they are really big and really important. So when the prices of nickel rose above $20,000 a ton late last year, Xiang would consider shorting nickel because his production costs in Indonesia for nickel were as low as $10,000 a ton. Now, since he is a producer, he will short nickel to hedge his actual production from a fall in prices. If prices go down, then the money that he makes on his short futures contracts help offset the decrease in money he will get for the nickel that he produces. One problem, though, is that the quality of the nickel in the futures contract is not the same quality as the nickel that Tsingshan produces. Think of it a little bit like shorting premium gas futures when you only produce regular gas. You would not be able to deliver a lower quality product to satisfy that contract. This is kind of the same thing. So the advance in nickel prices beginning with the Russian invasion inflicted losses on companies, including Tsingshan, that had sold nickel contracts to lock in prices for their own metal products. So those producers and their banks and their brokers struggled to meet margin calls from exchanges as the prices rose, so they rushed to close out losing positions by buying back some of those nickel contracts. Problem is, with all this uncertainty with the war, hardly anyone would sell to them, so the purchases led to a huge short squeeze. By early Tuesday, the price of nickel on the London Metal Exchange hit a record high of over $100,000 a metric ton before pulling back a little bit. So even though Tsingshan might have bought back some contracts, it is said they are still short about 30 tons on the LME and another 120,000 tons over the counter with other banks as counterparties. Oh, and they want to keep their short position because they still believe nickel will go lower. Now, the LME said on Tuesday that trades that took place in Asian hours before the suspension, when prices rose from around 50,000 to above 100,000, would be canceled. And even at Monday's closing price of about $48,000, Tsingshan's mark-to-market losses would number in the billions of dollars. And those trades that were canceled on Tuesday were almost about $4 billion worth of trades. And now the LME has imposed limit up and limit down restrictions, which means no moves above or below 10% of the March 7 close of around $48,000. And additionally, there's also the possibility of large long and short holders being able to net off positions at an agreed price, which I thought that was what an open market was supposed to do in the first place. So canceling these trades caused a lot of havoc for traders who have been active in the small hours of Tuesday morning. So some of them sold long positions at a profit only to have the sale canceled. Some placed relative value bets on nickel versus other metals only to find out that the nickel part of their trade was canceled And some banks use the exchange to hedge positions with their clients only to have the hedges torn up. So this is causing a whole lot of chaos for people. This is kind of like if during the GameStop short squeeze, it went from 300 to 500 in a day, and then the exchange saying that it was too high and they're going to cancel all the trades for the day and they're going to reset it back to $200. That's kind of the same thing. So a unit of China Construction Bank, which is one of Tsingshan's brokers, was given additional time by the LME to pay hundreds of millions of dollars of margin calls that it missed on Monday. Now, why did the LME give them this leeway? Because the Hong Kong Exchanges and Clearing Company bought the LME in 2012 for $1.9 billion, and the Hong Kong Exchange and Clearing is 6% owned by the Hong Kong government. So there is definitely a political angle and a too big to fail kind of thing going on here. Now, where does JP Morgan come into all of this? Well, for one, JP Morgan and one of China's largest banks, China Construction Bank, are providing credit guarantees to Tsingshan. Okay, so they're just providing a little short-term loan for no other reason than to make a little bit interest, right? Not exactly. It turns out that about 50,000 tons of Tsingshan's short is through JP Morgan. According to Bloomberg's Jack Farchi, about 50,000 tons, or roughly a third of Tsingshan's total nickel short position of over 150,000 tons, is held through an over-the-counter position with JP Morgan. And so based on that figure, Tsingshan would have owed JP Morgan over $1 billion in margin just on Monday before the run-up from 50 to 100,000. And so that's a pretty big figure, which JP Morgan would be on the hook for if Tsingshan fails. And that explains why Jamie Dimon's bank is leading discussions between Xiang and roughly 10 other banks and brokers through which his nickel short position is held. It also explains why JP Morgan emerged as the U.S. bank that was working alongside Chinese lenders to organize a financial bailout for the steelmaker. But it's a little worse than that because Tsingshan's difficulty in paying its margin call puts the banks and brokers in a bind because they have to make hefty margin calls themselves in their accounts at the LME to cover the short positions that they use to hedge these Tsingshan shorts. So if Tsingshan walks away from its commitments, the banks stand to lose billions of dollars. And now we know that none would lose more than JP Morgan. And so Bloomberg reveals that Tsingshan has a short position of about 30,000 tons of nickel directly on the LME, held through brokers CCBI, ICBC Standard Bank, and Sukden. And the remainder of the over 150,000 ton short position is held through bilateral deals with banks like JP Morgan. And many companies prefer to trade via such over-the-counter positions, which mean dealing only with the bank and are also subject to much fewer reporting requirements. This sounds a little bit like the Archegos situation where Archegos would do all these off-the-market deals with all these big banks and build up really large positions. I'm not saying that this is the case here, but it sounds very similar. So these banks, once they do these positions with Tsingshan, would generally offset their risk by placing short positions on the LME. And meanwhile, JP Morgan, the leading bank in global metals trading by far, has the largest single short position on the LME, according to people familiar with the matter. But that position is held for client businesses, and according to Bloomberg, there's no suggestion that the bank is placing its own short bets on nickel prices. So these trades are for customers, they're not JP Morgan's own proprietary positions. So JP Morgan is jumping in with these loans to save themselves from losing on both sides, because if Tsingshan isn't able to put up more margin with JP Morgan, yet JP Morgan has to put up another billion or so margin with their brokerage on the LME, this could be a big loss for them on both sides. And one solution in the works to let Tsingshan keep their short position and be able to deliver on their contracts is some help from the Chinese government. Since Tsingshan is China's largest stainless steel producer and is thus systematically important for Beijing, the Financial Times says one option being considered is for Tsingshan to swap some of their lower grade nickel it produces for refined metal held in China's State Reserves Bureau. Tsingshan could then deliver the high-grade metal against its contract on the LME and pay off its brokers and close its loss-making position. So assuming Tsingshan didn't short more than they can deliver, even fully hedged producers are having big problems with these wild market swings in commodities. Even Peabody Coal was also in a similar situation with coal prices spiking. So when markets have shocks to their systems, you see real cracks start to show, and you see how quickly they change the rules to make sure they stay in business and also to keep their biggest or most politically important customers solvent. So you see they have no problem deleting a whole day of trading as if it never happened, even though there are many repercussions for people that made the trades that they thought were legit and binding. So things are getting really crazy, and you should expect more stuff like this to happen in the near future. Do not invest too much in any one thing because, as you see, the unexpected seems to be happening more and more frequently. I hope you like this video, and I'll see you in the next one. Thanks for watching, guys.